This is just Amazon on Tuesday, January 15th, 2019. And this looks like a mess. So it's time to get rid of some of these lines. Let's get rid of these. Oops. Let's get rid of these. Let's clean this up because there's this triangle thing. It looked like it was working, but definitely not today. We're way up here. Today was a bullish gap. Yesterday was a bullish candle. It's a bullish gap within the range, but I mean, it's gapping up. Nice little triangle pre-market with some higher lows and relative highs. And we retest into that same range, and then we're off to the races. Get up here, and we slow down at yesterday's high. We actually made a new high at 9 o'clock. So about half hour into the market, making a new high from yesterday. And then just chop around in here, making really nice triangle here with a squeeze, and then have some really small candles here, bearish engulfing, bullish engulfing, and it breaks out. And that's actually when the squeeze fired. Nope, squeeze fired the next candle. Okay, so really nice consolidation here. Looks like it should break out because we're right at yesterday's high, and it does. Totally breaks out. And where does it go? Right into 1665, 1665.27. And here it just paused, and I thought it would do that. And I thought, there's a chance it could continue higher, but most likely it's going to roll down. It paused for like 2 hours, just chopped around in here for 2 hours, and then pulled back. Pulled back where? To yesterday's high and today's breakout. Almost yesterday's high. Pretty much back into today's range here with this triangle, and then rallied from there and paused again, 1665, and continued on up. So there, let's see, let's start with the puts because it got up here, and just like I was playing this, that it would go bearish from here, and we had some opportunities yesterday to go bearish. I mean, this was really the only opportunity to go bearish, but in here it paused for so long that if anybody was buying in this time frame, it just lost premium until it, actually started to break out. But by then, most likely tighten stop, or we're getting out for a loss or break even, and you missed out on any sort of gain. That was the only positive move today on the puts. Back to everything being so bullish. You could have taken the breakout from today, where it broke out from the pre-market levels, a retest back into that on this candle. So let's say you're getting in on just looking at today's pre-market, getting in on this pullback here. That's at 840. Buying in with, let's say, the 1700 call, because it just has a better risk to reward. Closer to $1 risk reward. So you're into this range. You know where the low is. The low is 385. So you're probably got to stop at 350, just to be below that. Maybe 375. But then that means 450 by 350. And what happens? That wick comes down and fills. Or you were at 375. So 475 by 375. That moved up. Almost got, no, it did get to 675. So you could have made 2R exiting here if it had exited, and then it pulled back. But if your stop was still down at 350 or 375, you're still in it. And you were just waiting. You're still at like break even for all of this until that happened. And it shot up to 1665. I'm sorry, 1665. And could have been exiting anywhere through here. Then in that pullback, where did it come down to? Almost 450 again. Could have been in at 475 by 375. Same setup as the early part of the day. Could have worked again late in the day for actually the same move back up into like the $10 range. So multiple times you could have been playing, even here 5x4. 5x4 worked. Once here, well, it worked in here. It just didn't get up to 2R. And then it worked in here as long as you were patient and allowed it to work. And then exiting, for at 10 would have been a 5R gain. And then waiting for it to pull back, it happened again. It went from 5 by 4 all the way up to 10. So that's the 1700 call. If you did something a little closer, let's look at the 1675 call. This one had a little bit more premium because it's a little closer. And, you know, you would need to have had, would have been harder to get the $100 risk, dollar options risk. 9 by 8, would have worked right at the open, but then it didn't look down into it here. Had you done 10, I always like the nice round number 10. 10 by 9 could have worked, but getting in at 10 here, the stop at 9, when the low over here was closer to 8, that's a little more risky. After this one, maybe setting it up 10 by 9 and waiting for this, that could have worked because it actually held a low here at 920. So 10 by 9 could have worked here. And then, if you were impatient, you were getting out of it, at 12 for 2R. And if you were patient, you could have just let this go sideways and then it broke out. And you essentially could have doubled it. It went from 10 all the way up to 20. That would have been a 10R trade. And then it looks like it almost came down to 11, sorry. The low there is 1106. So that trade only would have worked once, going 10 by 9 all the way up to 20, if all of that lined up. And then, maybe you didn't hold on until it went to 20. Maybe you got out at 16. Okay, that's still 6R. And then when it's doing this, it looks like it's rolling over, and then it does kind of like a double bottom in here. Still you couldn't have done really 12 by 11 because it's just outside of that range there. So it's like, okay, where do you really set it up? And you just got to pick some smaller candles and, see if those are smaller on the 5-minute. And there were some smaller ones in here. So it's possible to have gotten in on one of those on its way back up. As long as you're eyeing this as being a nice, retest bounce off of yesterday's price and today's. So, to me, this was a little bit more of a rejection at 1665. I thought we were going to stay below 1665, so I was wrong. And on the daily, today we pushed on through the downtrend channel, and so this definitely looks like something has changed. The last time we went from the bottom to the top of the range, we rolled over. This time we've gone from the bottom to the top of the range, stayed in the top of the range, and now it looks like we're breaking out. So the one thing I don't like is that we've got 5 positive candles in a row. This one's not really that bullish because it was a bearish gap and go, and it's indecisive here. So it's not as strong of a bullish candle to me. It's just, it suggests there's a little bit more of a rollover coming in, and then getting back up here today, this is much stronger of a bullish candle than this one. And then let's see, the high and the close. Oh, they're still a little bit off. It looks like a shaved top. So we're almost above the high here at 1676.61. The high today is 1675.16. And, this was one of the scenarios we talked about continuing up some more. I would look for it to get above these bearish candles, get up into the 1700, low 1700s. If we can get to 1750, what is this one? 1747. Yeah. If we can get up here to 1747, then we're a little bit further above, this line than where we were here above the line. And that'll show that there's definitely some more potential for it to continue higher, but it needs a rest. If it gets up here to 1747, I would say it really needs a rest. This has been a lot of bullishness. This has been a lot of buying. From this indecisive candle at the bottom of the range, we've had 1, 2, 3 bearish candles. That's it in the last few weeks. Out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So that's almost 3 weeks. So really from this low, this was 3 weeks ago. With some holidays in there, that kind of stuff. But this was 3 weeks ago. And we've got 3 candles that are bearish, a close below the open. Not necessarily in a bearish, not large bearish move, but this is the least amount of, I was going to say here, we had, less candles less overall candles. What is this one? 9? 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 candles from the low to the high. We had 3. That's 9 candles. Here's 14. You know, I guess we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 candles, we had 3 bearish ones, including this one. Well, no, not including that one. Well, no, I need to include it. So that's 4. 4 out of 10. This was 3 out of 9. Didn't even get up to it. These, that's more bearishness in here, more bearish candles. But you know, with the move we've put in here, I just feel like it needs to rest some more. You know, it is the beginning of the year, so the first candle of the year was this one. You know, very strong, bullish engulfing, inside candle to follow. That continued to break out. We're right at, you know, a clear level we've been at before, right as these are crossing. So, you know, we could still stay in this range some more. But, you know, if we go back to the 5-minute, you'll see that we're actually up above this price. We're up at 1687 after hours. So we're moving in on the 1700 price. You know, we're moving in on this up here. And that's going to contend with some of these bearish candles. So there should be some bearishness coming in here just from the people who sold here are going to look to sell again. If we can move up a little bit more, it would look like, you know, this inverted head and shoulders I was seeing before, and then that didn't work. If you take a bigger view of this, this could be kind of a double shoulder, a bigger head, and then we could continue on up. Let's say we get up and come into this. The price in here is 1784. If we can come up to 1784 price or 1778 price and then roll back down, I mean, we could roll back down to this kind of a low from 1784 down to 1434. That's like a 350 or 350. Yeah, around a 350 point move down, but that would form like another shoulder. I don't know. You got to wait for that kind of thing to happen, but let's see where we go from here. If we are indeed gapping up tomorrow, it should be a bullish retest gap. So look for that to pull back a little bit into 1665 and then bounce. And it's going to try and trap some people too. So if we can move up a little bit more, if we gap up, let it roll back down, come into 1665, look like it's going to break down. Maybe we get something like this again, where it actually pauses on the line and then breaks down. Look for something like this where it's going to continue back up. It's going to pop, you know, to kind of have a false breakdown, to get some more bears in, to get more bulls to think that they're wrong, and then it'll just, you know, it'll just trap people. So that's what could happen. I guess we'll have to wait and see tomorrow. Hope you enjoyed this video. This is Justin AMZN. Thanks.